Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699 or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled The Complexities of Inherited IRAs. Mike, a lot of this complexity started at the end of 2019. What are we seeing now in terms of how inherited IRAs are treated today versus how they were treated before?
The biggest change is for people other than a spouse, and I'm going to overly generalize here, but as a rule of thumb, if you are inheriting a retirement account from someone other than your spouse, most likely you are going to need to empty that account within a 10-year time period and probably take a required minimum amount every single year, although the IRS has been willing to waive that since the rules were changed.
Now, as you mentioned, they've waived that each of the last 4 years, but there's no guarantee that they will in the future. Is it worthwhile for investors to talk with their tax professional and advisor to figure out what the best plan is to minimize taxation over that 10-year period anyways?
I mean, even if they don't waive the penalty, even if you do have to take a minimum amount, you should be planning this, right? Because if you just wait, then you might end up being surprised at the end of year 10 when all of a sudden I've got this massive account to withdraw and I have a whole bunch of taxation to realize, and it starts impacting everything from my Medicare premiums to my capital gains rates to everything under the sun.
The guide this month is titled The Complexities of Inherited IRAs, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by going to ArmstrongAdvisory.com. That phone number again is 800-393-4001, or you can request the guide at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Mark Vendetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Mark Vendetti.
Happy Tuesday. Welcome back to the Financial Exchange. Mark, did you get to buy Berkshire Hathaway A shares at 99.7% discount
after the
yesterday?
show yesterday, so what we're talking about here is there was a glitch in pricing on Berkshire and other companies. They dropped steeply in a very short period. Wasn't due to fundamental reasons. It was a glitch.
Yeah.
Some error in trading.
Yep.
And we joked on the show yesterday about people who had, say, a limit order or an order to buy at a specific dollar amount. Were they able? So if I went into, for example, and put in a limit order for stock X at 50 cents, would it actually execute if due to technical error the stock price dropped to near zero?
So you didn't.
I don't think
you
so.
didn't get A shares. Of
The
Berkshire
short answer
Hathaway
is
at,
no. But I was
$200.
after the show. I was wondering what stocks do I want to put limit orders on for some absurdly low amount in the event of a glitch. But they'll never honor those, right?
I would think not, but nonetheless, there was a big glitch on the New York Stock Exchange yesterday. Berkshire Hathaway was the most well-known company impacted. Only the A shares, which there's probably not a whole lot of limit orders out there for, given that the share price sits at, $700,000 or something like that. He's never split the A shares. He doesn't.
But I bet a few went in after yesterday.
Yeah, maybe. But nonetheless, we continue a week here. It's a jobs week, and we received data on the job openings and labor turnover survey this morning at, I believe, when does that come out, 10 a.m.? Yeah, 10 a.m. So just 7 minutes ago we received data. We'll try and cover that later today on the show. On Friday, we have a jobs report giving us information such as the unemployment rate and, one of the two key data points that the Federal Reserve is looking at when it comes to their overall rate-setting policy. And then we also, I just saw this on my desk, not ahead of time, but a request for a segment on buying versus renting in the Boston area. So we'll try and tackle that one at some point as well. That's a listener request. So the first story that we have today is about the bad news is good news trend that's been playing out and does frequently play out whenever you are in a Fed rate hiking cycle, right? So we had this happening. When did the rate hiking cycle end under the Trump administration? Like 2018?
Very end of 2018 is when they
you had
reversed
this
course.
same thing playing out here where, investors were looking for signs of modestly bad news that wouldn't necessarily indicate a recession, but might indicate a change in policy from the Federal Reserve. And that's what investors have been kind of looking for over the last few months. I mean, the preference is you just get good news on inflation, which is just good news for the Federal Reserve. But the other things that people have been looking for, hey, are there any bad news stories that could contribute to lower inflation, right? Are we seeing anything in terms of layoffs that could indicate a slightly weaker labor market? Are we seeing anything in terms of currency or other moves that might indicate some sort of economic slowdown and contribute to lower rates, which, as we have, I think, has been pretty well spelled out, lower rates have meant or perception of low rates have certainly been a boon to stock markets at different points in time over the last 12 months. I would this article is arguing that, hey, that might be changing this week for some obscure reason that I'm not really sure of. But the one piece that they're correct about is that at some point, if you get a bunch of bad news, that can't just be a justification for lower rates. It can also be evidence of a looming recession. I would just argue that we're nowhere near there right now.
So bad news is good was a phrase coined probably 2009, 2010. It's tongue-in-cheek. It means bad economic news means lower interest rates, which is good for equities. Never fully made sense to me because ultimately the value of a stock depends on
how much money they can generate
how much money a company can make, which is contingent on the health of the economy. So never fully made sense to me, but again was always kind of tongue-in-cheek.
Sure.
Anyway, bad news is good has kind of been borne out this year. The economy has slowed down. Unemployment's gone up a little bit.
Yeah, we've had slower GDP than we did last year.
Yeah, we got a revised number for the first quarter, 1.3%. That's annualized. That's after inflation, much lower than last year's 3+ after inflation clip. So the economy has seemingly slowed. We got data to that effect on Friday, too. We had negative after inflation disposable personal income growth and spending growth.
Yep.
You could call that bad news. Economic deceleration may be underway. We won't know till we get more data. Yet the stock market's up 11, and I'm laughing a little bit because by historical standards, this is a fantastic, almost unprecedented, almost start to the year, up nearly 11.5%.
Yeah,
that's what bad news is good means.
Yeah, and look, like I said, at some point that turns into bad news being bad news because, well, let's just, not every time, but in most cases of the United States Federal Reserve getting inflation under control, it's meant bad news becomes a recession. News of a slowdown and news of slowing inflation eventually does get inflation under control, but only through a recession. We have not seen that yet to this point, and that would be what you're interested in looking at.
Yeah.
I've never paid attention to this index that is mentioned here, but I do find it interesting. It might be one that I try and follow. Citigroup puts together an economic surprise index. So every time we talk about a data point on here, we generally talk about, hey, these were expectations going into this data point. I can pull them open right now. So if we take a look at this Friday, for example, we have a jobs report coming out. And expectations for this Friday, they poll a bunch of economists and try and get the kind of average forecast. The U.S. unemployment, we're expected to add 190,000 jobs in the Friday jobs report, and the unemployment rate is expected to stay steady at 3.9%. Citigroup puts together this surprise index, and what it measures is how frequently is the data worse than expectations or better than expectations. And what they found is that the surprise index began sliding in mid-April, turning negative in late May, falling about 120% from, doesn't really say what period. But that's an interesting one to me, is if that's where you have potential damage to equities when expectations are above and beyond where things come in, and then you start getting, surprise after surprise to the downside. That's where I start getting interested, right? If expectations remain way too high for the economy or for earnings or for any number of these economic data points, in spite of evidence to the contrary, then that's of interest to me. That's where you potentially get, I think, an overvalued type market susceptible to big pullbacks.
Well, investors are quite optimistic. That's plain by the year-to-date return of the S&P 500 that I mentioned a couple minutes ago, 11.4%, which is pretty extraordinary. Mm-hmm. That's plain when you look at the price of your average stock relative to its earnings, the so-called PE ratio. There are different ways of defining the denominator, the E in that ratio, but they all point to stretched valuations. That is, relative to history, investors are more than ever willing to pay a premium for future earnings. That's a little awkward, but I'll just kind of leave it at that.
Markets are flat to slightly down to start the trading day today. We've got the S&P in negative territory by about 0.25%. The NASDAQ down by about 1/3%. The Russell 2000, those smaller size companies, off a little bit more than 0.8%. And then the Dow pretty much flat, sitting up by 20 points or less than 0.1%. And the yield on the 10-year Treasury again slipping today below 4.4%, down to 4.361% at this moment. And oil again continuing to slide here below $73 a barrel as those OPEC plus cuts not quite as severe and significant as some investors were clearly hoping. We're going to be covering a bunch of that next on the Financial Exchange. But when we come back, I want to get more into those valuation stories you were talking about. In particular, the last few years have been very heavy weighted towards the top when it comes to returns and valuations of S&P 500 companies. We're going to be talking about a little bit about why that has been the reality over the last few years. That's next on the Financial Exchange.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who have served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan do not endorse each other and are not affiliated.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019 and the more recent changes that have made things a bit more complicated. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and it's really important that you develop a strategy to deal with these changes to the law, or you and your family could face significant tax consequences in the future. If you've inherited money from your spouse, the process remains relatively simple. But if you're inheriting an IRA from someone other than your spouse, there are numerous issues that you'll want to be aware of to protect those assets. Call us right now at 800-393-4001 and ask for your copy of our new guide called The Complexities of Inherited IRAs. That number again is 800-393-4001, or you can also request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands is the perfect destination for your next vacation. Enjoy St. Croix, St. Thomas, or St. John. Enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
This morning at 10 a.m., we received some labor market data from the Bureau of Labor Statistics on job openings and labor turnover. If you've been familiar with that statistic we've mentioned over the last couple of years, where there were 2 jobs open for every single person looking for work, this is where you get part of that report. This measures a bunch of data on the labor market as of the last business day of April. So, we are more than a month behind here when looking at it, but still interesting to me. And quite honestly, the report itself can be interesting, but this month's report was rather uninteresting, I think would be my conclusion. The total number of job openings sat at 8.1 million on the last business day of April. That is little change from the prior month. Total hires and separations, again, very little changed at 5.6 million for hires, 5.4 million for separations. The quits number, 3.5 million last month, and layoffs and discharged at 1.5 million. Once again, almost no change month over month. So there were some slight changes in terms of where the job openings are. You saw decreases in healthcare and social assistance to the tune of 204,000 fewer job openings. State and local government and education, 59,000. So it seems to me, if I'm going to try and put a narrative to that the backlog of hiring that was being attempted in the healthcare and state and local government sectors might be happening here as they're closing out some of those jobs, or there's budget constraints that I'm not aware of at some of those employers. But while this is a backward-looking report, it can give you good information about a turn in the labor market. Again, when you have a lot of job openings or when companies are closing out a lot of job postings, it can indicate something. I don't think this indicates much of anything, in my opinion. Not that I'm the foremost expert on JOLTS, Mark, but nothing here to me looked alarming or exciting when it comes to the labor market.
I think it probably confirms the level quits rate and the modest decline in the number of job openings, probably confirms the story of the last few weeks that the economy might be softening a little bit. It probably supports that idea.
Softening or plateauing?
I don't know. I don't know which.
Yeah. It's certainly not it doesn't appear to be in the midst of a massive change. We're not seeing anything in terms of the other interesting labor story that gives you real good, kind of almost real-time data would be the weekly unemployment claims. You haven't seen any uptick there. So, yeah, we might be stagnating a bit or just kind of holding steady. I think today there's a lot less of a desire to be jumping around from one employer to another out of concern of a potential recession and not wanting to be the last one in the door. But other than that, I don't read much into this beyond that.
It's hard to know because economic relationships are unstable. What works as a good forecasting of a variable, if you will, in one period doesn't necessarily work well in another period.
Fair point.
The JOLTS, the number of job openings, that 2 to 1 figure you spoke of earlier, job openings to number of unemployed people, a measure of how tight the labor market is, that worked reasonably well in economists who look at these things models to explain the surge in inflation in 2020. Mm-hmm. In fact, throughout the 2000s, really, it worked better than the unemployment rate, which is the traditional measure of slack in the labor market. But again, relationships break down. Hard to know what to make of this. I mean, if my head is sort of spinning, I can't even imagine what people who don't have the luxury of time and training that I do to look at this stuff. I don't know what it means, Mike, to be honest.
According to the Wall Street Journal, the average stock in the S&P 500 is hurt more by rising yields and helped more by falling yields than any time this century. They don't go on to explain where they got that claim, so I hope that they put some sort of statistical analysis to this to be able to point to the fact that stocks are more tied to interest rate moves these days. But nonetheless, it has been a pretty clear split over the last few years in terms of larger companies benefiting more in this environment than their smaller counterparts. And if you want the simplest look at this, go take a look over the last several years at the performance of the S&P 500 versus, say, the Russell 2000, which is a better barometer of smaller size companies. But even within the S&P 500, you can see the valuation split pretty clearly. So if you divide up the S&P 500 into 10 segments and then rank them based on size, you'll see a very clear trend of those larger companies being valued more expensively. And I'm interested, Mark, on your take. Is this logical? Does this make sense? And will it ever, I guess, is there ever an environment where small caps we should expect to perform better?
So I did a little bit of work on this after reading this article, and I do not. So this author, James McIntosh, a popular finance journalist, used to work for the Financial Times. He's now with the Wall Street Journal. The upshot of his argument seems to be that small stocks are more interest rate sensitive because they don't have access to deep capital markets.
Yeah, the argument would be if you're a small size company, you haven't been able to lock in lower interest rates from 2020, and therefore you might be you might be more beholden to high interest rates and borrowing costs that are higher, and you might not have a huge slug of cash sitting in a money market that's generating a bunch of interest for you.
By that logic, in higher interest rate environments, small company stocks should perform worse. Worse. So I looked at it, and for my measure of interest rates here was the Fed funds rate. You could use the 10-year Treasury too, which I do. If it's worth it, I'll share that. But it's definitely not the case that there's a close correspondence between the difference in performance between large and small companies and the level of interest rates.
Because that's interesting, because that is the argument that's getting made right now. But I think when I started saying this, what I realized is that, well, haven't small caps underperformed their larger counterparts for the better part of the last decade and a half? So is this moment truly due to interest rates, or is it something else?
To me, the period that offers the strongest counterargument to this point, and I'll just go decade by decade here and focus on the 70s in particular. Small outperformed large by over 7 percentage points in the 1970s. Okay. 60s and 70s were 60s too, for that matter. The outperformance was huge, over 11%. We think of large cap stocks as being the better performer because of the experience of the last few decades. But in the 80s and 90s, small company stocks were the fad because of their significant outperformance of the prior few decades. And during those decades of the 60s and 70s, Fed funds averaged in the 1960s, that's my proxy for interest rates here, 4.5%. That's the mean Fed funds rate throughout that decade. And again, small company stocks outperformed. I wouldn't consider small 4.5. 4.5 may have been too low in retrospect because the economy did overheat. But that's not low in an absolute sense in historical terms. 1970s, mean Fed funds rate was 7.2. Again, in both those decades, small clobbered large. In the 80s, large outperformed by almost 2 percentage points. In the 90s, large outperformed by 4.5 percentage points. Mean Fed funds, if you take the average of those 2 decades, is a little bit higher, but not gobsmackingly so.
So your conclusion would be that perhaps something other than interest rates.
Yeah, I do think you have to control for other factors, and so that's not a very sophisticated way of looking at it. Just breaking it down by decade and looking at outperformance.
Let's take a quick break. Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan do not endorse each other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about the differences between revocable and irrevocable trusts. Todd, when would it make sense to use an irrevocable trust versus a revocable trust?
Yeah, so in this case, you really need to think about a couple of things. One, how much you're worth. Obviously, if you're worth, well over 4 or 5 million, 6 million, probably you're self-insured, so you're not so concerned about nursing home planning, and therefore the irrevocable Medicaid trust that we're talking about here might not be as applicable. But 4 million and under, folks are saying, and the other issue would be over age 60, let's say, and there's no rule of thumb, but 60, 65 is a great time to be thinking about protecting assets from the nursing home because it takes 5 years to do it. So if that's the case, then an irrevocable trust would make sense. And don't be put off by the word irrevocable, because you will find that the differences between revocable and irrevocable, at least these Medicaid trusts, is very, very few and far between. You're still very much in control. You live in your house. You enjoy your income. You manage your money. You buy and sell your property. It doesn't matter that it's irrevocable, so don't be afraid of it.
The estate planning experts at Cushing & Dolan have written a brand new guide that will answer the most common questions you have about the differences between revocable and irrevocable trusts. You can request this guide by calling 866-848-5699. That's 866-848-5699. Or you can also request it from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in mixed territory as investors await May jobs report due out on Friday, where 190,000 jobs are expected to be added. Right now, the Dow is up by about 0.25%, S&P 500 is down by 8 points, and the NASDAQ is off by about 0.25% or 37 points. Russell 2000 down by 0.2%. 10-year Treasury yield is down by 5 basis points, now at 4.34%. And crude oil is down about 1.25%, trading at $73.32 a barrel. For the latest on the meme stock frenzy, following another post from Keith Gill or Roaring Kitty, GameStop down by about 3.5% today, following their 21% jump yesterday. After yesterday's close, Gill posted again that he did, in fact, hold on to his options call for the video game retailer. Meanwhile, Tesla down by about 0.75% after the electric car maker saw its sales in China climb in May, up 17% from a year earlier. Separately, a new report from CNBC details emails circulated inside NVIDIA showed that Elon Musk told the chip maker to prioritize shipments of processors to X and XAI ahead of Tesla. After NVIDIA and AMD announced their respective new line of AI chips, it was Intel's turn this morning as the chipmaker unveiled new details about its AI laptop chip called Lunar Lake at a tech conference in Taiwan. Intel down by about 0.25% so far today. Elsewhere, GitLab posted strong revenue growth and hiked its annual outlook. However, the software development platform saw its quarterly net loss widen. That stock down by 1.5%. And Bath & Body Works down by 9%, despite the personal care retailer beating first quarter earnings and revenue forecast. However, the company did offer disappointing guidance for the current quarter. I'm Tucker Silva, and that's Wall Street Watch.
Mark, I want to revisit a conversation we were wrapping up during the last segment. And here's the narrative. Bigger companies, because of their scale and access to bond markets, have been outperforming smaller companies without access to bond markets or that weren't able to lock in lower interest rates and are not sitting on enormous piles of cash. And that fact of rising interest rates, higher interest rates where they are today, is what is leading large companies to outperform small companies. That's the narrative that's
how I read it.
Being pushed right now. That's the story that's coming from the Wall Street Journal. And, you know, it's nice. It's a nice story because it also kind of dovetails into how the average consumer is dealing with higher interest rates, right? If you already owned a home and have some cash, you might be better off now. If you don't own a home and you don't have a bunch of cash or you have debt, then it might not be a great economy for you right now. Your point would be that you're not buying it because... at least an initial...
I mean, we have tools. We can test it. He's
right.
making an argument. You have to phrase it in the form of something an analyst can get their teeth into, can sink their teeth into. Are smaller companies more interest rate sensitive than large companies? That's how I generalize that. And I looked at it briefly, half hour, 45 minutes this morning. There's more work to be done. But no, the evidence does not suggest that movements in interest rates have a bigger effect on smaller companies than they do on larger companies. So what I looked at, and there's, again, more work to be done here, but I don't think this guy, when we respect him, and I'm not going to name him because there's no need to slight him, but this is the problem with financial journalism. It's not real work. It's an opinion.
Yep.
He pulled a couple companies, looked at a couple of maybe select environments. That doesn't constitute real work, and this is why financial journalism can lead people to make bad decisions or to draw bad conclusions. I don't have any definitive conclusions to draw from this. You never should.
Right.
I can tell you that the data doesn't support his contention.
Right. And I think the simplest way to look at this would be go look at small versus large size company performance over the last 2 decades, and you'll find pretty consistently that large outperforms small. Am I wrong about that?
No, you're not. But there are significant, as I mentioned in the last segment, in the 70s, which you would think would be a poster child for the argument that small company stocks are not as well insulated from interest rate changes as large. Small killed large for other reasons in the 70s because we were coming off a period of very high valuations, much like we are today for large relative to small. You can't ignore so-called valuations in this discussion.
Text from a listener here. My daughter and her fiance have a combined income of $170,000. They have $100,000 cash for a down payment, graduated in 2023, and rents they are looking at in the Boston area are $3,000 to $3,500 per month. If they bought a $450,000 condo in Boston, the mortgage payment would be about $2,000. I see for that type of payment maybe $2,500 depending on the interest rate, but nonetheless. He thinks that he or she who texted in thinks it's a no-brainer to buy instead of rent because the value of the dollar is just going to continue to go down. What's the risk of
value? Does that mean inflation? What are they talking
unclear,
about?
But that was the quote. Value of the dollar is going to go down, so own hard assets, I guess, would be the the piece there.
So that he wants an inflation hedge. Okay.
Big question is, what is the risk of the condo market in Boston? Could a crash put them underwater? I mean, I don't know, and I don't think that anybody is going to know if we're ever going to be hit by a condo price crash. So I probably wouldn't make that part of my equation where I'm evaluating this. But I did just go to Redfin and take a look at 3 condos in the Boston area in the $450,000 price range. And I was just kind of interested in the question. So taking a look at it, assuming a 20% down payment and buying one of these places, you do have to keep in mind that your mortgage payment is not the only piece that matters here. So in this one that I'm looking at, when you add in HOA dues, which any condo in Boston is going to have some modest HOA dues, if not some substantial HOA dues, property taxes plus homeowners insurance, you're looking at bumping up that monthly amount from around $200 to $2,500 per month up to about $3,200 to $3,500 a month. So suddenly we've gone from a story of, hey, principal and interest is $1,000 cheaper than the rent payment to, hey, we're about in line with the rent payment that this individual is talking about. So I think that's the first piece to look at is, and I know people look at taxes and HOA dues differently, but these are sunken costs that you're not getting back. It is similar in my mind to rent, right? If you're paying property taxes to the city of Boston, yeah, you might be reaping some of the benefit, but especially if you're not sending your kids to the schools or using a lot of the services, you're just paying the taxes and not reaping the benefit there. I think if I were evaluating this decision, I'd be a lot less focused on the question of will prices fall. I don't think anybody knows if condo prices are going to fall.
But
okay,
if you were to, that's how I would look at it, sort of macro. Boston compared to national home price declines, if 2006 to 11 is your worst case, if you're putting this into your little scenario, stress test, whatever you want to call it, that we all use our imagination to generate, nationally home prices fell peak to trough. This actually looks a little low, but I'm going to go with it. This is from Case-Shiller National Home Price Index. About 26%.
In the Boston Metro?
Nationally,
26%.
So Boston Metro was about 17.
That makes sense to me.
That's consistent with our recollection.
Yep.
So if you're stress testing in your mind, make that your worst case.
Yeah.
What would happen if from the price you pay today, which is rough, let's assume it's the peak.
Yep. If prices fell 17%,
let's round up. Say
how
20,
would I be?
Say 20%.
Right.
How does that affect
Would I be underwater?
You're going to be
still
underwater,
okay?
probably, if you borrow 80. So let's just assume you're underwater, but you keep your job.
Yep.
Isn't that the big consideration? Can you pay the mortgage? Because who cares if you're underwater if you continue to... I was probably underwater in 07.
I think the other piece that is important to me in this decision is what's your story here, right? Like, hey, I'm buying a condo in Boston that I intend on living in for the next 2 years, at which point I want to start a family and move out to the burbs.
Yeah.
I personally wouldn't even consider owning a condo in Boston were I on that trajectory. I've got a bunch of fixed costs in the way of realtor commissions that I'm going to have to absorb down the road, and who knows what's going to happen to the condo market in the next 2 years in Boston. Might not fall apart by 20%, but I don't think I should rely on it appreciating. So, I guess that's, for my answer, that's how I would approach the question is, what am I doing here, right? If I'm looking to buy a condo and be in this specific area for the next decade or so, and I'm really confident that I know the area and want to be here, I think you're right, listener, that's a pretty compelling reason to consider a purchase right now if you have the down payment and you can lock that in and potentially refinance down the road if rates come down. If you're a lot less certain about that decision and you're not sure, again, this person graduated in 2023. Do they even know where in Boston they want to be? Are they certain that they would like the neighborhood that they're going to be purchasing into, or might they want to move and explore somewhere else in the next year or two? That would be my main concern.
It sounds young. I know nothing about this, obviously, this person's situation. It sounds young to be tying yourself down, though. I mean, job changes in your early 20s are pretty common.
They are, yeah.
What if you are underwater? Go use a extreme case, say 30%. Could you afford enough today for a down payment to make sure that if home prices fall by 30%, which I think is close to zero possibility of that happening, so let's roll with it. Make sure you put enough down so that you won't be underwater.
Right.
If that's your
concern.
deal breaker, I don't want to be underwater no matter what, then put enough down such that you're not underwater even in a most extreme drawdown scenario, right?
I think so. I like our approach. Imperfect, but nothing's going to be perfect on whether or not to buy or rent a home. So that's where we'll leave it for that question. Let's take a quick break. When we come back, E-Trade considering kicking off the stock market. I'm not going to call him a guru. What's the right word for Keith Gill right now? The stock market clown of the season. We'll cover that next on the Financial Exchange.
Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Inheriting an IRA was a straightforward process until the passage of the Secure Act in 2019 and the more recent changes that have made things a bit more complicated. Hi, this is Mike Armstrong from the Armstrong Advisory Group, and it's really important that you develop a strategy to deal with these changes to the law, or you and your family could face significant tax consequences in the future. If you've inherited money from your spouse, the process remains relatively simple. But if you're inheriting an IRA from someone other than your spouse, there are numerous issues that you'll want to be aware of to protect those assets. Call us right now at 800-393-4001 and ask for your copy of our new guide called The Complexities of Inherited IRAs. That number again is 800-393-4001, or you can also request it online from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating a trust is oftentimes the first step in the estate planning process. It helps you prepare for the unknown as well as the inevitable. Revocable and irrevocable trusts are the most common types of trusts, but there are significant differences between the two. So before you make that crucial decision, call Cushing & Dolan at 866-848-5699. Ask for their new guide called The Difference Between Revocable and Irrevocable Trusts. Let them help you understand which may be right for you and your family and protect the wealth that you've achieved throughout your working years. Protecting your assets is paramount to being able to enjoy your retirement years. So call right now, 866-848-5699, and get your free guide today. Give yourself the peace of mind you need as you build your estate plan. Again, that number is 866-848-5699, or request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
According to the largest 401k provider out there, Fidelity Investments, the plan savings rate, the average plan savings rate across all of their 401k accounts, reached 14.2%. If you include employer contributions. That's an important caveat here. But if you include that chunk that goes in from the employer in addition to the employee, as of March 31st, that combined rate reached 14.2%. It's also the closest the combined savings rate has ever been to Fidelity's recommended 15% benchmark. I have no idea how Fidelity comes up with that 15% benchmark, but few companies would benefit more than Fidelity for employees reaching that 15% benchmark based on the fact that that's how they make
you
a
could
lot of
call
money.
that aligned interests. Like 401k record keepers, if you've ever had a job where they've come on site and done 401k fundamentals, they always exhort you to save more. It is in their interest, so it's a little cynical. It's they get a piece of that. They get a piece of investment management expenses, typically, though not always. You should ask about this. It's in their interest. It's in your. I've lightened up about this over the years because you could be very cynical about Fidelity, Vanguard, and Empower, and all the rest.
I mean, it's tough for me to argue
every
that people putting more money into their 401k doesn't benefit those people.
So they provide so-called record keeping. They do the accounting on your account. They value the shares. They make sure you get paid the right amount when you do a withdrawal. They produce your statements. There's a lot going on behind the scenes. So though the encouragement to save more is a little bit self-serving, it's also probably in everybody's interest.
Yeah, and
how they get to 15, I assume they look at the average participant on their platform. That's what they call us. They call us participants. They look at the average participant on their so-called platform. They ask how much they have to save to replace X percentage of their pre-retirement income, which they know because they know how much you're putting away, which is a percentage of your salary. And they come up with a kind of rule of thumb. I guess more is always, would you say, Mike, more is always better if you can afford it? And there are limits on 401k contributions.
Yeah, of course,
so.
there's limits on 401k contributions.
But what do you tell somebody?
I suppose there can be circumstances where if you're in a specific tax situation, favoring something other than a traditional 401k it might be a better idea, right? Like let's say that you are in a situation where you are close to RMD age, you've already maxed out your employer match, and you have extra cash to do. Should you be bumping up that 401k contribution rate to 30%? I'm not sure. It depends on the situation, but there can be circumstances where I would say that's not the greatest idea, but they're probably few and far between, especially now that most companies provide a Roth 401k option. But I'll tell you, I don't think that's what people notice and believe, right? I can't tell you how many people that I sit down with and they're like, I don't know. I don't trust my employer. I don't really like them. I don't really want to be here long term, so I'm not putting money into the 401k. And it's like, well, that's interesting, but I think you might have a misunderstanding of how this thing works. Or the other really, really common one is, I don't know how to choose between traditional versus Roth, so I'm just doing nothing, or maybe I'm splitting the difference without much thought into which one should go into where. And I think my key takeaway here is doing something is probably better than nothing, but doing something on an educated basis where there's some thought into it, into how it's going to impact your overall financial and retirement scenario is better than both. So if you have questions like this, hey, I'm considering a new job and they have a 401k versus a pension versus a deferred comp plan, or I'm doing this and I'm not sure why I'm doing it, I'm not sure how it's going to play into my overall retirement plan, give the folks at Armstrong Advisory Group a call. We work with clients on their retirement benefits day in and day out, and we can help you too. The phone number to reach us here at the Armstrong Advisory Group is 800-393-4001. We have offices located throughout New England, from New Hampshire, Maine, Rhode Island, Connecticut, all over New England, of course, Massachusetts, where we're broadcasting from as well. And we'd love to sit down with you and talk about your specific scenario. The number again for the Armstrong Advisory Group is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Well, we mentioned it yesterday, and we'll bring it up again today. Keith Gill posted on Twitter, he's the roaring kitty persona, that seemed to be a screenshot of his position in GameStop. At the end of trading, I think the stock was up a good 20-something% yesterday. News today is that E-Trade is considering telling Keith Gill that he can get off the platform going forward after growing concern about potential stock manipulation given his purchase and activity around GameStop. And I don't really know what responsibility E-Trade has here to monitor this, although I would think that at the very least you probably have to report the activity. If you know, when it's this big of a person, when it's this big of a persona, you might have to, for instance, report a bunch of like suspicious activity reports. And I think likely that's what E-Trade is thinking about here is, do we have potential reputational damage?
I don't know what the legal definition of market manipulation is, but if it doesn't include this, it should. This is his conduct is intended just to goose the price of the stock. For short, he bought options on it, the article recounts, before making that post. Options are by definition short-term. They expire. How is this not manipulation? How is this legal? This undermined.
Does he have any inside information?
No, I didn't say it was insider trading. I said this is market manipulation. It's a total. As I understand it, it's a different standard.
Yeah.
So, look, my point is if it isn't, and this is just my layman's reaction to it, I bring no special expertise to this issue. If this isn't, it should be. It undermines confidence and faith in markets, and I'm a little bit idealistic, I admit it. I get misty-eyed about stock markets. They're supposed to direct capital to its highest and best use. In their best incarnation, they help economic growth. This does not. It degrades them.
That's fair. Quick break, but a lot more to cover in the second hour of the show. We'll be right back on the Financial Exchange.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston, the Money Matters Radio Network.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a guide this month titled The Complexities of Inherited IRAs. Mike, with how the inherited IRA picture has changed in the last few years, one of the things that a lot of people need to consider is how to minimize taxation, not just across their own lifetime, but on a multi-generational basis once they're gone.
Yeah, and quite frankly, prior to these changes, IRAs were often used, especially Roth IRAs, as a kind of multi-generational inheritance plan. And these new rules have completely changed that, like I said, for most beneficiaries of retirement accounts. And so a lot of the planning that was done prior to 2020, if not haven't been looked at again, just might run contrary to your entire thoughts of what you did before these changes.
It seems to me that it makes sense now. You've got to consider the tax situation, age, and other characteristics of your beneficiaries who might not be spouses when figuring out who to name on your IRAs.
Yeah, not only that, and a lot of that stuff was considered prior too, but maybe you've got two kids with vastly different income situations. Do you consider naming one the traditional versus the other the Roth beneficiary in order to minimize total taxation across generations? These are complicated issues that I know it might sound like just applies to a small subset of Americans, but most people these days have a retirement account.
Our guide this month, again, it's titled The Complexities of Inherited IRAs, and the two ways to request it are by phone or online. Website is armstrongadvisory.com, or you can call 800-393-4001. That website, again, is armstrongadvisory.com, or the phone number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating a trust is oftentimes the first step in the estate planning process. It helps you prepare for the unknown as well as the inevitable. Revocable and irrevocable trusts are the most common types of trusts, but there are significant differences between the two. So before you make that crucial decision, call Cushing & Dolan at 866-848-5699. Ask for their new guide called The Difference Between Revocable and Irrevocable Trusts. Let them help you understand which may be right for you and your family and protect the wealth that you've achieved throughout your working years. Protecting your assets is paramount to being able to enjoy your retirement years. So call right now, 866-848-5699, and get your free guide today. Give yourself the peace of mind you need as you build your estate plan. Again, that number is 866-848-5699, or request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan do not endorse each other and are not affiliated. There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all three islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who have served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Mark Vendetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Mike Armstrong and Mark Vendetti.
Good morning and welcome back to the Financial Exchange. Markets are open and not much going on leading up to this Friday jobs report. The S&P and NASDAQ both off by about 1/3%. The Dow off 0.1%. Russell 2000 down by 0.8%. Yield on the 10-year Treasury sitting at 4.35%. That has been on the move downward recently, as has the price of oil, which is now sitting at down by 1.6%, or down to $73 per barrel, which I will take. And
what if it means economic slowdown? Will you still take it?
No, I will not. I want one without the other, Mark.
I want cheap gas and a roaring economy.
That's right.
Low unemployment and low inflation.
If you don't mind. And a cherry on top. And world peace, if you could. GameStop stock, I'm bringing up because why not? Stock is down by 2% today. However, over the last 12 months is up now 67%, with Keith Gill getting back into the game.
Can we stop
here.
using his name? Can we stop crediting him? Can we stop?
No, we can't. We have to say his name.
Call him the market manipulator. There's a fella out there who's posting incendiary,
I'm calling him Keith
suggestive-
Gill because I don't want to say roaring kitty.
Or deep blanking value.
Yeah.
No,
I can't say one of those
All
words.
his everything else is profane.
What else am I to refer to him as?
Well, there's a fella out there who has made a fortune, not a small fortune, but potentially hundreds of millions of dollars by exhorting people to buy a company with very questionable fundamentals. He's created this online following of young day traders. And a couple weeks ago, after disappearing for a couple of years, posted a picture of himself, suggested he's getting engaged in trading again, sends the price of this stock. Now, we now know he bought options on the stock immediately before doing this, made hundreds of millions of dollars. And the question we were asking in the last segment was, does that constitute manipulation? Mike, you made a good argument that it's really no different than what any portfolio manager does. They buy something, then they go out on CNBC and talk about it.
That's what I was going to say. Is my counterpoint, and look, I'm not an SEC regulator, so I'm going to leave this to them in terms of what they believe is or is not market manipulation. But every single day, there's a portfolio manager on Bloomberg or CNBC or Fox Business out there talking about some company that they own. And it turns out, they don't really give a whole lot of disclosure about it, but they own prior to getting on there, and they tell you.
They're usually
about it.
longer-term investors too. His situation is a little bit different.
It is. Yep. He is very. This is a very specific strategy, and it is not very clearly not based on the fundamentals of the business. But
he may claim that it is.
Even let's take a step back and let's talk about a much more famous investor who does not go on CNBC and do this sort of thing. But let's talk about Warren Buffett, right? He goes, let's just hypothetically say that Warren Buffett saw real tremendous value in GameStop stock and decided to load up on it. Again, hypothetical. To my knowledge, Warren Buffett does not own any GameStop. Just want to clear that up here. We would find out about that, depending on how much he bought, at their next regulatory filing, usually a quarter later, unless he bought over a certain percentage of the outstanding shares of the company, in which case I think it's an immediate disclosure. He's not doing anything. He's not doing what Keith Gill is doing, which we're talking about here. But even in those cases, would you expect GameStop stock to go through the roof if Warren Buffett suddenly bought a whole bunch of shares?
I'm not sure I love the analogy. If he had instead bought options and then that very morning tweeted a picture of himself I want to keep it specific to these facts. I admit, Mike, there's a much like Potter Stewart said about pornography, there's a gray line, but I know it when I see it.
Okay.
I would say this isn't my area. I'm a little uncomfortable saying definitively this is market manipulation. What the heck do I know? It doesn't feel right, though. This feels different than what you just described.
If it is market manipulation, then I think we have a serious problem with all the people that show up on CNBC and Bloomberg every day to shop their book.
Mike, again, the facts here seem to be a little bit different. None of those people are buying options on a stock, which is a short-term right.
Do you know that?
They would presumably have to disclose that. That
True.
would be part. So I think these guys
which, by the way, Keith Gill just did, right? He posted his positions.
He did. Maybe
online.
He thought that constituted disclosure. Had he done it before, perhaps?
Right.
Again, the facts do, and the facts and the timing, I think,
are
matter
important.
here. He bought options, then he made the post.
Yep.
And then, maybe to his credit, disclosed the amount of profit he made.
But that
on
was
those
a good few days, a good week later. That was
okay.
a
I
good
didn't
week.
I didn't realize. I thought it was the same day. See, so this makes it worse, Mike.
Yeah, it does. The post about his position in GameStop, I think, was at least a week after he
almost
posted
suggesting
the
that he
image
was
of himself leaning forward.
Sorry.
Good.
Maybe someone advised him, "Hey, disclose that. Cover yourself." Almost that seems so disjointed relative to the initial sequence that maybe somebody advised him to look. I'm speculating. This is not my area. This just doesn't feel right, Mike. It feels like something that could undermine confidence in financial markets, given how little confidence people have in institutions generally these days. This is not helpful. Please, regulators, clamp down on this
stuff.
stuff.
By the way, this is why, however, he gets such a following, I think, is because...
Oh, sure. He appears to be...
He's the Robin Hood.
Anti-authoritarian.
Right? Yeah. Like, he's kind of, I'm robbing Peter to pay... I am going after the big guy. That was the initial push for this guy was, hey, I'm going after short investors.
But he's doing it solely for personal gain. Unlike
that's what this looks like.
Unlike the counter-institutionalists who say that I just invented that term. I don't think it's particularly descriptive, but the anti-authority folks of the 1960s, there's no principle here. It's solely about personal gain. Is that noble? I mean, what is there about this person to admire? What's he trying to prove? Other than that he can get rich quickly at the expense of a bunch of dupes. Most of whom will not make money.
Yeah.
I'm not saying that's
not saying we should
position.
admire him.
I'm
just not sure
that
that it's illegal. That's where I'll land.
I don't. I think plainly it's not because he's not in jail right now.
Yeah.
I'm saying it should be. It can't be made illegal retroactively. Yep. But if it's not captured in the definition of market manipulation, then we got a loophole.
Yeah. The majority of middle-class Americans say they struggle financially. This is according to a poll commissioned by the National True Cost of Living Coalition. It found that almost two-thirds of Americans considered middle class said they're facing economic hardship and don't anticipate a change for the rest of their lives. That is about as depressing a poll result as you can get. About 40% of respondents were unable to plan beyond their next paycheck. 46% didn't have $500 saved. This was a poll of 2,500 adults, and 65% of people who earn more than 200% of the poverty level, which is at least $60,000 for a family of four, are considered to be middle class. And like I said, two-thirds of them are struggling significantly financially. Oh, sorry. And then one more piece. About 1 in 5 respondents have at least $10,000 saved, but 28% have no savings at all. I think my conclusion on all of this would be a fewfold. One, this problem has almost definitely gotten worse for these people over the last 4 years would be my guess. Based on every other poll that I've read, I think people's middle-class folks' financial situation has deteriorated during the last 4 years. That having been said, I do not believe that we've gone from, say, 20% in 2019 to 2/3 at this stage. My guess would be if you'd done this poll, and they didn't do this poll in 2019, that you probably would have gotten pretty bad results back then as well, because what we have been experiencing in the United States for a few generations now has been a severely widening wealth gap, income gap, any way that you measure the wealth gap and income gap. It has gotten substantially worse over the last few decades. And for the middle class in particular, it has been a very difficult economy to succeed in. And the last few years of growing asset prices with higher inflation for a large portion of that middle class, I think has probably made it worse, would be my overall summation.
Yeah, this is consistent with other survey results. People, on average, feel squeezed.
The other conclusion I'll come to is, in and of itself, probably bad news for the current administration with elections right around the corner. So those are my two major conclusions here is this is bad. It's been bad for a while. It got worse over the last few years, and I don't really see much that's going to make it change to be less bad.
Change in presidential administration ain't going to do anything, folks.
That would be my guess, but it might make some people feel good. Let's take a quick break. When we come back, a little bit of trivia next on the Financial Exchange.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. Creating a trust is oftentimes the first step in the estate planning process. It helps you prepare for the unknown as well as the inevitable. Revocable and irrevocable trusts are the most common types of trusts, but there are significant differences between the two. So before you make that crucial decision, call Cushing & Dolan at 866-848-5699. Ask for their new guide called The Difference Between Revocable and Irrevocable Trusts. Let them help you understand which may be right for you and your family and protect the wealth that you've achieved throughout your working years. Protecting your assets is paramount to being able to enjoy your retirement years. So call right now, 866-848-5699, and get your free guide today. Give yourself the peace of mind you need as you build your estate plan. Again, that number is 866-848-5699, or request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Taxation is a critically important element to be aware of when you're building your estate plan, especially when it comes to understanding inherited IRAs. The tax treatment of these accounts depends on a variety of factors, including the specific type of IRA, the relationship between the deceased and the beneficiary, and the beneficiary's personal circumstances. In this month's new free guide from the Armstrong Advisory Group called The Complexities of Inherited IRAs, will help you understand the possible tax complications you could face when inheriting an IRA. Plus, we'll walk you through the recent changes to federal rules regarding these accounts. Get your free guide today by calling 800-393-4001, 800-393-4001, or you can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hi, I'm Lisa Hughes. This Veterans Day weekend, help honor all who've served our country and join WBZ for the annual DAV 5K, a run or walk to support disabled vets here in Massachusetts with housing, transportation, and other critical support. Saturday, November 9th at DCR's Castle Island in South Boston. Let's thank all who have sacrificed for our freedom and help our heroes on their road to recovery. Visit DAV5K.Boston to register or donate today.
The DAV 5K Boston is presented by Veterans Development Corporation.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
The Financial Exchange has built an incredible partnership with the Disabled American Veterans Department of Massachusetts. We can't wait to take part in this year's DAV 5K, set for Saturday, November 9th at Fort Independence on Castle Island, and registration's now open. You can help out great American heroes by walking, running, or simply making a donation. Your gifts will support services such as the Veteran Advancement Program, which offers permanent and affordable housing opportunities for veterans and their dependents. Learn more at dav5k.boston. The DAV 5K Boston is presented by Veterans Development Corporation. Time for trivia here on the Financial Exchange. We're going to continue our U.S. state capital trivia like we've been doing over the past few days. So here we go. Trivia question today. What is the last state capital in alphabetical order? Once again, what is the last state capital in alphabetical order? Be the fourth person today to text us at 617-362-1385, and you'll win a Financial Exchange Show t-shirt. That's 617-362-1385, and the fourth correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Sorry, my mind is just turning trying to figure this out, so I guess I'll talk instead of trying to figure out the answer.
Yeah, don't even bother.
To the question. In 2021, ESG was kind of in its heyday, and ESG, if you're unfamiliar, I think you are at this stage, environmental social governance is what ESG stands for. And in 2021, BlackRock CEO Larry Fink told his shareholders that his firm's fund managers would influence company boards to promote racial and social justice. Today, we know 3 years later, there's been quite a bit of backlash against Larry Fink and BlackRock on this overall idea. There have been state laws that have been passed to attempt to divest of BlackRock in many pension funds, etc. And I think partly in response to this, BlackRock and other fund companies are trying something new out, which might be anchored in good intentions, but is probably going to be a cluster if rolled out. So here's the idea. You might have a 401k. Within that 401k, there are probably between 5 and 50 different funds that you can choose from, all of which own a whole bunch of different stocks in a lot of cases, sometimes bonds too. Those companies vote on, their board of directors vote on all sorts of issues, and you as a shareholder, if you own the company's stock, technically have a vote on those matters. Maybe you don't own enough shares to really have an impactful vote, but every vote ultimately matters to these things. And today, if you own that company's stock, let's say you own Apple shares through your 401k in a mutual fund, you have no vote on that matter. You basically defer that vote to whoever runs that mutual fund, and they may elect to say, hey, for really big institutional share classes or very big institutional investors, we'll let them guide the vote, but generally speaking, they vote for you. The new idea is say, hey, shareholder in this mutual fund, you can opt in to vote on these decisions rather than us doing it for you. Makes sense. A democratic process, ultimately. The reality of this is, one, I don't think a lot of people are going to opt in to do this if they were given the option, and I'll cover why. Two, it sounds like it would be quite messy to try and figure this all out and get it all out to people. So let's just think about like the average mutual fund. I actually don't know. I couldn't find any good data on how many individual stocks the average equity mutual fund owns, but I would think in a lot of cases it's over 100. Mm-hmm. Each of those companies, at a very minimum, usually has at least one issue that they're voting on per year. So at a bare minimum, if you're opting in to vote on proxy issues, then, the average mutual fund owning 200 stocks, let's say, at least one issue per year, you're saying, okay, if I own one mutual fund, I'm going to be sent details on and information on 200 potential voting issues per year per mutual fund that I own. This sounds like, again, good intentions without any real impact at the end of the day. Because, look, I know people today that own individual companies and have those rights to vote on proxies. And in my experience, 99 times out of 100, they throw them in the trash.
Yeah, the motivation here is political. It's not financial.
Yeah, it's abdicate. I think it's, hey, we don't want to be responsible for these decisions. We're facing a bunch of blowback, so let's let the shareholders do it. Abdicating some of the decision, I think.
Yeah, I get that.
Yeah, I would too.
I get that.
I don't think it's the wrong move. I just don't think people actually want to do this.
I don't think so either, and it could sway these votes in favor of the wealthy who own more shares, therefore have get more proxy votes. It is proportional to ownership.
Yep.
It's not like votes in a democratic society like we're used to.
Yep.
One person, one vote.
Right.
More shares you own, the more votes you get.
Of course.
So I had to look that up. I had to make sure. So I'm reading this from a reasonably good authority, I think. I just don't know how in practice you make this manageable. Professional or institutional investors like pension funds and college endowments hire a proxy voting agent to do this for them. They give them broad guidelines, but they don't vote proxies, which is the expression used. Yeah, they don't vote them themselves. It'd be too unwieldy. You'd spend all your time just analyzing proxies. These are things like board, composition, shareholder, compensation, mergers and acquisitions, issues like that.
The good news is that no regulator is requiring this, and I think that part would be a mistake. If I suppose BlackRock and Vanguard and others want to allow people to opt into this, I don't really see an issue with it. Just understand how overwhelming this would likely be for the average person. To suddenly start voting their shares on every mutual fund they own would be a very unwieldy and arduous process for people that, like, every day I get calls from people that say, my God, I am getting inundated with all the mail that I get from just a relatively simple portfolio in most cases. I can't stand how much mail I'm required to receive. I can't imagine what it would be if all of a sudden you were getting proxy votes on all these different fund classes that you own. So that's an interesting potential change coming to the 401k and mutual fund space, I guess, in general, is where it's being pushed. And again, I get why. Look, if you're BlackRock and you're facing all this blowback, this is kind of the perfect solution for you.
You know what's going to happen is there are going to be little entities cropping up, little proxy voting services, politically themed. If you're a right-winger or a left-winger, go to proxy voting service A or B. We'll vote all these proxies according to conservative or liberal. I'm not saying this is a bad idea, by the way.
Yeah.
I'm halfway thinking I ought to do it.
Sounds like a profitable business.
They do, nice little cottage industry. Yeah. You just have to hire the now you have to pay them.
Sure.
But it could be, modest.
Yep.
But the volume potential could be huge if properly marketed.
I want you to vote all of these things with this ideology in mind.
These are the principles.
Deep Christian values. That's all I want you to vote on every proxy.
Yeah, whatever's most important to you.
Yeah, as I have said, anything other than purely return to me on any of these things is just an opportunity for, I think, somebody like this to inject and make a whole bunch of money, as was kind of my cynical view of ESG from the first place of, hey, this is a great way for BlackRock to charge a whole lot more.
Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about the differences between revocable and irrevocable trusts. Todd, is there a difference in the taxation of a revocable trust versus an irrevocable trust, and any difference in how you would file your income taxes?
So surprisingly, a lot of you might say, well, yeah, there should be a difference. And there is, but there really isn't. So let me explain. With a revocable trust, everything that you put in it is going to be titled under your Social Security number, like bank accounts and brokerage accounts, etc. Whereas items that you put into an irrevocable trust, like bank accounts and brokerage accounts or rental properties, those accounts would be set up under a tax ID number for the trust. So the trust now does need to file its own tax return. It's called a Form 1041. However, these Medicaid trusts are designed by us to make them grantor trusts for income tax purposes, which means you are the owner for income tax purposes, and all the income and gain gets reported on your personal return. So while you're filing a separate return for the irrevocable trust, you're paying exactly the same tax at your own rate, just like you did before the trust and just like you would with a revocable trust.
Well, the estate planning experts at Cushing & Dolan have written a brand new guide that will help you answer the most common questions you have about the differences between revocable and irrevocable trusts. You can request this brand new guide by calling 866-848-5699. That's 848-5699, or you can also request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Taxation is a critically important element to be aware of when you're building your estate plan, especially when it comes to understanding inherited IRAs. The tax treatment of these accounts depends on a variety of factors, including the specific type of IRA, the relationship between the deceased and the beneficiary, and the beneficiary's personal circumstances. In this month's new free guide from the Armstrong Advisory Group called The Complexities of Inherited IRAs, we'll help you understand the possible tax complications you could face when inheriting an IRA. Plus, we'll walk you through the recent changes to federal rules regarding these accounts. Get your free guide today by calling 800-393-4001. 800-393-4001, or you can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you looking to volunteer for an amazing nonprofit organization that helps our veterans? The DAV Department of Massachusetts Transportation Network needs volunteers right now. This network provides free transportation to and from any VA medical appointment for veterans of all eras. To become a volunteer driver, you do not need to be a veteran or a DAV member. You just need to have the willingness to help our veterans and have a valid driver's license. Sign up now at davma.org. That's davma.org.
Creating a trust helps you prepare for the unknown. Revocable and irrevocable trusts are most common, but contain significant differences. Cushing & Dolan's new guide called The Difference Between Revocable and Irrevocable Trusts may help you choose the right trust for you and your family. Call 866-848-5699. That's 866-848-5699, or request the guide online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan do not endorse each other and are not affiliated. Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play The Financial Exchange. This is the Financial Exchange Radio Network.
All right, trivia question today was, what is the last state capital in alphabetical order? That would be Trenton, New Jersey is the last state capital, where when they placed it in alphabetical order, if you could talk. Yeah, I do got this. Yeah, just mine's all over the place here. Trenton became the state capital in 1787 when New Jersey entered the Union, and Trenton is the third oldest state capital. Donna from Johnston, Rhode Island is our winner today, taking home a Financial Exchange Show t-shirt. Congrats there. We play trivia every day here on the Financial Exchange. Tune in tomorrow for your chance to win. See complete contest rules at financialexchangeshow.com.
Mark, you bought a new car last year, didn't you?
I did.
Why didn't you buy an EV? I don't mean this as a joke. Actually, was it a consideration for you to go hybrid
Not really,
or EV?
no.
And if not, why?
I guess range anxiety, as they call it. Price.
Yep.
The things cited in the article that I think you're segueing into.
Okay.
I share those concerns.
Yeah. So I bought a car 2 years ago now, I think. Might have been 3. And at that point in time, we were also in the midst of that, quasi-vehicle shortage where every car you bought had to have an extra, $5,000 on the sticker price, so I was not willing to go for one of the trendy cars at that point in time. But having a few years now to think about my purchase, I feel similarly.
That's what you get for ragging on Tucker.
I know.
Yeah.
And that's in spite of the new EV tax credits that the Biden administration has been pushing. Now, to be clear, the EV tax credits that have been put into place are not available on that many vehicles because there are very specific requirements when it comes to where the battery was manufactured. So I think that perhaps it's a little bit early to measure the impact of these EV subsidies, if you will. But thus far, they have not had that much of an impact. And
or maybe they have. Maybe sales would have been half as much. It's very hard to control for
True.
other factors here.
True.
I'm not defending it, by the way. I personally hate it. But
I understand.
You just don't know whether or not it's been effective.
Only about 13% of U.S. adults say they or someone in their household owns or leases a gas hybrid car. Just 9% own or lease an electric vehicle. That's according to a poll from the Energy Policy Institute at the University of Chicago. And then furthermore, 46% say they are not too likely or not likely at all to purchase an electric vehicle right now. I would not put myself into the not at all likely category, but yeah, when I look at the options to me available right now, and we're fortunately not in the market for a car at this point in time, but I still don't think I'm there with an EV. I think that I would be I'm very interested in a hybrid vehicle. Specifically, I'm very interested in a plug-in hybrid. For my type of driving, I find that to be predictable, useful, and helpful. But the idea that with my poor planning that I put into, some of my everyday personal life stuff, that I might need to hop in the car to drop one of the kids off at a birthday party and find out that I'm almost out of a charge and need to go park at a Tesla charging station for 15 minutes. just not there. And that has nothing to do really with range anxiety. It's just convenience and not really fitting my current lifestyle.
That's range anxiety, isn't it? You're afraid that the thing's going to crap out halfway through your ride.
Yeah.
Isn't that the definition of range anxiety?
I guess that's the definition of range anxiety.
You don't want to be sitting there embarrassed. Your kid's friends in the back seat saying, "Oh, the battery's low. It's not moving."
A loser.
Yeah, what Mr. Armstrong.
Go run around this
You're
McDonald's for the
loser.
next half an hour if you don't mind,
We're
kids.
stuck. We got stuck with Mr. Armstrong at an intersection. Everybody was laughing at us.
Anybody that's ever been to a dinner date with Michael Armstrong has been stuck with Michael Armstrong. Yeah. What do you have for us, Tucker?
Revocable and irrevocable trusts are commonly used to protect your assets, but there are significant differences between the two. Don't take chances securing your future. Call Cushing & Dolan right now at 866-848-5699 and get their brand new guide called The Differences Between Revocable and Irrevocable Trusts. Cushing & Dolan are experts in elder life planning, and they can answer critical questions that you may have as you determine which trust may be best for you and your family. The guide contains crucial information about a variety of topics, including the income tax effects of both trusts, ways to leave assets to your children, as well as many other factors you should consider in the estate planning process, such as your net worth, your age, and your marital status. Call today, 866-848-5699. That's 866-848-5699. Or you can request this guide from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
The one interesting piece that I found in this article about EVs that I was a bit surprised by, honestly, according to Kelley Blue Book, the average price for all new vehicles was $47,244, which, I guess, cheer me, that's a lot more expensive than I paid for my car even during the car shortage. The average price for electric vehicles in February, $52,314. That is not as significant. Again, I think both of those prices are ridiculous for a car, and I'm not about to buy one for those prices, but that is not as significant a price gap as I would have anticipated.
No, it's closed a bit.
That's closed quite a bit, in my view. Again, for other reasons, I'm still not interested, and that average new vehicle price is being dragged up because EVs are part of that equation, so I'd be more interested in pure gas versus pure electric vehicles. But that is a narrowing gap, and I do find that intriguing, and the closer it narrows, the more interested I would potentially be. Speaking of car deals, they seem to be making a bit of a comeback right now in some specific situations, and I really want to get somebody from maybe like Edmunds or Kelley Blue Book on the line here to kind of talk to us about where we're seeing this. Are we?
Yeah, don't worry about it.
Well, should I not blow the lead then here?
No.
Long story short, we're going to be having somebody on the program
maybe
sometime in the near future, according to our producer, Thomas. But there's a piece from the New York Times today that some of these deals are coming back.
Thomas?
That's his legal name.
What?
Well, okay.
Do you want to
talk about this on air?
Do you want his social security number too? I got that.
Yeah. What else do you want?
Dodge Challengers and Chargers were eligible for $11,000 discounts from Stellantis.
Wait,
God, still
your name is
worst.
Tom Silva? Like
yes!
the guy, like isn't that the guy on this old house?
Yeah, this old house. Yeah. I am not anywhere near as handy as
no, I know that. I wouldn't
let
you anywhere near.
Barely screwing a light bulb.
I mean, I did install a doorknob recently, so I'm pretty much him.
On a door?
Correct.
Okay,
that's right.
Got it. Okay.
A door that needed a doorknob. Got you covered.
Did you install?
Thanks, Tommy.
Did you install the locking mechanism the wrong direction? Because I've done that once.
TBD.
Why won't this door stay shut? Oh, yeah.
Do you go by T. Tucker Silva when you sign your name, or is it just
no?
Is Tucker the middle name?
Nope.
It is not. Okay, so it's kind of a nickname.
Yes.
Should we all have them? Different subject.
Okay. Very good.
Go ahead, Corky. Back to you.
Cars are getting discounts. We're going to try and find a guest to tell us where you're finding the discounts later this week on the show, but we're going to take a quick break now because I can't talk about this.
Foots Armstrong will be right back.
Without taking... Do you call me Foots?
I think I heard that on Larry David.
We'll be taking a quick break, and when we come back, some Stack Roulette.
Scooter Armstrong
on the Financial
back in a minute.
Exchange.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Taxation is a critically important element to be aware of when you're building your estate plan, especially when it comes to understanding inherited IRAs. The tax treatment of these accounts depends on a variety of factors, including the specific type of IRA, the relationship between the deceased and the beneficiary, and the beneficiary's personal circumstances. In this month's new free guide from the Armstrong Advisory Group called The Complexities of Inherited IRAs, we'll help you understand the possible tax complications you could face when inheriting an IRA. Plus, we'll walk you through the recent changes to federal rules regarding these accounts. Get your free guide today by calling 800-393-4001. 800-393-4001, or you can also request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
There's no better place to vacation than the United States Virgin Islands. St. Croix, St. Thomas, and St. John have everything you need to enjoy a spectacular romantic getaway or a week-long family vacation. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. The weather is perfect all year round, so book now and experience the most beautiful beaches anywhere in the Caribbean. World cuisine, iconic history, a wide variety of water sports, and an energetic nightlife. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Learn about all 3 islands and plan the ideal vacation for you and your family. America's Caribbean paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. Go to visitusvi.com. That's visitusvi.com. Creating a trust is oftentimes the first step in the estate planning process. It helps you prepare for the unknown as well as the inevitable. Revocable and irrevocable trusts are the most common types of trusts, but there are significant differences between the two. So before you make that crucial decision, call Cushing & Dolan at 866-848-5699. Ask for their new guide called The Difference Between Revocable and Irrevocable Trusts. Let them help you understand which may be right for you and your family and protect the wealth that you've achieved throughout your working years. Protecting your assets is paramount to being able to enjoy your retirement years. So call right now, 866-848-5699, and get your free guide today. Give yourself the peace of mind you need as you build your estate plan. Again, that number is 866-848-5699, or request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan do not endorse each other and are not affiliated.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Time for a bit of Stack Roulette here on the Financial Exchange. Mark, I'm interested in your opinion of congestion pricing as an economic concept. I don't know that you've given it much thought in the past, but just generally when we talk about congestion pricing, traffic is one area that it applies to most commonly. There's a case in Florida where they have a high-speed congestion toll lane where you pay a certain fee to be able to go in this specific lane. New York is going to be implementing new congestion pricing on the island of Manhattan, specifically anything south of 60th Street, which is basically the very south end of Central Park, will face new $15 per car and $24 to $36 per truck pricing on weekdays if you want to go into basically most of Manhattan starting, I think this was June or July. And I guess I'm just interested in your take on the idea of congestion pricing in general. Does it have... I feel like some political ideas are rooted in really stupid economic ideas, and I don't consider this to be necessarily one of them, depending on how you spend the money.
No, I think economists love, generally speaking, charging people for what they use. It prevents overuse. That's the simple principle at work here. And it can also be used, not in this instance, though this may be a side effect. I don't know if it's a benefit. We'll see. To mitigate some so-called externality, like pollution's an externality.
Yep.
I have no incentive to control my own level of pollution if other people don't. So again, charging people for what they use is one remedy for that. The author of the piece that this topic comes from today is a professor of finance at NYU Stern, which is an awesome program. So this guy's presumably a brainiac, and he hates the idea of congestion pricing.
Although I believe NYU campus is north of 60th Street, so I don't think he's going to be impacted by this.
Yeah. Oh, interesting. Okay. Nevertheless, he seems to hate it. Though he doesn't cite traditional economic arguments for or against, he seems to think it's a bad time for the New York City economy to be making it more onerous for people to get in and out. I don't know. I've not driven through New York in the past 4 years. You have. Was traffic any this is too, you'd have too small a
sample.
By
the way, I was way off on that. NYU is nowhere near north of 60th Street. It's in Lower Manhattan, so I'll stand corrected on that one. So he's going to be hit by this.
So he's personally incented to oppose this. Maybe I don't think that affects
his main argument is that, hey, New York
Not
has
a good
taken
time,
a
right?
hit since 2020.
Yeah.
This is not the time to be implementing a tax on coming in and out of New York City.
But the traffic problems there, like here, are still pretty severe, I imagine.
In my experience, yes, it was still a pretty significant traffic issue getting in and out of Manhattan, and that was on Memorial Day weekend when nobody was working.
And honestly, maybe if it were, I haven't looked into this, not my area, he presumably has, but if it were easier to get in and out of, that might sort of paradoxically, making it harder to get in and out of by car, might make it easier to get in and out of by other means, or might make it more tolerable for people considering relocating a business there because commuting there is easier. I don't know, Mike.
I think he may be right that overall there could be a net detrimental impact to the New York economy from this new tax. I think if you use this to better expand the New York public transportation, then perhaps that gets mitigated some. But certainly if you're charging trucks $36 to get onto Lower Manhattan, then I would expect those shippers to have to charge their customers more money, meaning prices could go up in New York for all sorts of different goods, and I would acknowledge that. But I think Manhattan's also one of the few places where you could successfully do this, right? There's only, I think going south, there's probably only like 10 roads that you would actually have to place tolls on. And two, Manhattan is one of the few areas in the country that there is a very reasonable alternative to driving there. Right? You can't do this in Phoenix, Arizona, because you can't go anywhere without a car. You can barely do this in Boston because the public transit system, I don't know, in my view, is so inferior to New York's that it's barely serviceable. Although, if you're serious about cutting down on traffic in the 128 area, like this type of thing is a way to accomplish that. And so, again, it's not to say the money won't be squandered. I'm sure in many ways it will be squandered, this new toll that is going to be put into place here. But I, generally speaking, like this concept of slap a whole bunch of penalties on people, and at the same time, if you can put in HOV lanes, for example, to increase, or incentivize other types of driving behavior, then I'm on board with that too. And I would not necessarily be opposed to this type of thing in the Boston area as well. if it weren't for such a poorly run public transit system over the last decade and a half.
Yeah, generally speaking, you charge people up to their maximum pain point.
Yep.
And right now we don't do that with driving in heavily trafficked urban areas.
I still cannot fathom why in the city of Boston it costs me something like $6 to enter the city of Boston via I-90, but if I want to come from the north or south on 93, it costs me $0. I don't understand it. It makes no sense to me. There's a toll on the Mass Pike. There's no toll on 93. Other than, well, that's the way it's always been, which is the answer I always get. I don't understand why we do that. What do you have for us for Stack Roulette, Mark?
Oil prices continue to fall. They're down about 13% in the last month. Some of the most recent phase of the slide is apparently due to OPEC.
They've maintained their cuts, but they did not.
So that's always a variable and a factor one way or the other. I wonder how much of it is related to concerns about or the reality of a slowing economy.
Yeah,
essentially.
There's two pieces to this, right? There's supply and demand. On the supply side, well, one, OPEC's influence just isn't as great as it used to be, right? When you've got as much drilling as happens in my favorite.
Well, I haven't seen
my favorite trivia
any data
question.
suggesting consumption has fallen, but this is a futures, so I don't
Agreed.
know. So I don't know, but futures are supposed to be forecasting future demand. That's partly what that market exists for. So.
But I was hitting on the supply side of things, which is today OPEC's influence compared to 30 years ago is far less significant, in my view, in terms of their, and I would think measurably based on
we're
how
doing
much oil they
13 plus
produce.
million barrels. We're the world's biggest producer by, I was going to say by far. It's not quite by far, but easily the world's biggest producer.
I would think it is by far. I mean,
what does Russia do? Like 10?
I don't know.
I think
I
Russia's
have no
about 10.
idea. Yeah. So what does Saudi do?
So, several.
Yeah.
I don't think it's quite. Maybe it is 10.
Yeah.
I don't know. I could Google.
But
Google it and find
today
out.
compared
So I just
to
wonder,
30 years ago in terms of their impact, it's not that significant. And for them to say, hey, we're maintaining the cuts, but we're not extending them.
On the margin, everybody matters.
Sure.
But it matters less maybe than it used to. Well, it's not like we could just turn the dial and crank up our output either if they decide to.
True. The point that I think you made successfully, but I'll reiterate, is that falling gas prices and falling oil prices can be, good news, and I like to fill up my car for cheaper gas. I'm right there
when gas
with
was
everybody.
really cheap? During the Great Depression.
Yeah.
And during the Great
and
Recession.
the Great Recession.
Yeah,
I
gas
remember
was
those.
really cheap.
Yeah,
now, someone will
$1.25.
snap back. Someone will say, you jerk. It was also really cheap in the late 90s. Things were fine then.
Yep.
Slightly different circumstances. But, yeah, that's true. But generally speaking, Mike, like you said, cheap gas is not a sign necessarily of a robust world economy.
No, it is oftentimes not. And according to AAA, right now, the average price for a gallon of gas is, again, continue to come down, sitting at $3.52 per gallon. A month ago, you were up at $3.66, and a year ago, we're about where we were, $3.55. Again, all according to AAA for a gallon of regular. Taking a look around at markets here, we've got all three major indices in negative territory as we close out the show and head towards the noon hour. The Dow off 53 points. The S&P off 20 points, or about 1/3%. The NASDAQ off 57 points, again, about 1/3%, as we wrap up today's edition of the Financial Exchange. We'll be right back at it tomorrow, folks, so tune in and have a great rest of your day.